Big banks start cutting fixed-rate loans as the auction market slows. Local investors rush to exchange-traded funds, and Boeing to cut 17,000 jobs and slow the production of planes. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 14th of October, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, it's been one of the busiest weeks of the year for the housing market, and sales have been okay at best, really, just as major lenders start cutting interest rates on home loans.
Yeah, a lot going on. Now the weather's warmer and the footy seasons are mostly over. People are selling houses again in large numbers. There were more than 2,500 auctions across the country last week, the sixth highest for the year, and the preliminary clearance rate came in at 66.6%. That was better than the very low 63.9% the previous week, thanks to a solid jump in Sydney. It came in about 69% at Sydney. That's according to CoreLogic. Melbourne held most auctions, more than 1,000, and its preliminary clearance rate was 64.8%. While the weekly rate across the country was close to the 10-year average, certainly the trend, as demonstrated by the 4-week moving average, is down. And we know house price growth across the nation slowed appreciably during the September quarter to just 1%. We also know that Perth, Brisbane and Adelaide prices have risen more than the rest of the country, such that Melbourne is now a relatively cheap city to buy in. Pretty amazing, given it's not that far off being the biggest metropolis. In fact, I think it is the biggest metropolis now once they change their boundaries. Sydney's median price is 1.6 million, way above the 970,000 in Melbourne. But in between those two cities are Adelaide, Canberra, Brisbane and Perth. The next few weeks are big auction weeks, culminating in the end of the spring selling season, late in November. It's a real test for the market because there are more homes on sale, and the cost of buying a home, i.e. the interest rates on loans, have peaked.
It really is a staggering difference, isn't it? Between 1.6 million for Sydney and $970,000. You would not expect such a huge gap.
Especially because Sydney and Melbourne are the two big cities. Now, I think officially Melbourne is now bigger than Sydney because they have adjusted their boundaries. You just don't expect to see prices in the biggest city in the country being below everywhere else. Now, we've spoken to our friends at Domain about this, and there's all sorts of reasons, from taxation of investors to supply on the market. But it still is a surprise, I've got to say.
Yeah, just the size of the gap just gets me every time. Sean, you mentioned interest rates, and on that point, the big banks are cutting fixed home loan rates with ANZ on Friday, following the leads of NAB, Westpac and Commonwealth Bank. So they're all doing it.
Sure are. ANZ cut its fixed home loan rates by up to 0.6 percentage points for owner-occupiers and up to 0.7 percentage points for investors. At 5.99%, ANZ's lowest 3-year fixed rate remains higher than its major bank competitors, with Commonwealth Bank, Westpac and National Australia Bank all starting at 5.89%. The lowest 3-year fixed rate on Rate City's database is 4.99% from SWS Bank. Now, fixed rate loans reflect the cost of money in bond markets, and with bond yields falling, lenders, the big banks, can afford to lower interest rates for home loan borrowers. Now, the 3-year rate sits well below the standard variable interest rate, which is actually around 8.9%. If you're going to a lender, though, ask for a lower rate because you get all sorts of discounts for all sorts of things. But certainly a fixed 3-year rate is lower than the standard variable rate, and that suggests that the banks are very confident that over 3 years, interest rates are going to fall quite a bit. The moral of this tale, Michael, shop around and get the best deal.
Yeah. Clearly, there are some good offers out there at the moment, especially if now all four of the big four are there, and then Macquarie as well being a bigger player now in the home lending market. Mm-hmm. There is certainly there is reason to make a few calls before you just sign up.
Absolutely.
Now, Sean, let's take a look at local markets. Where did things finish up on Friday?
The S&P ASX 200 closed down just a touch to finish at 8,215 points for the week. The bourse was up 0.7%. On Friday, the energy and utility sectors were among the best, the materials among the worst, so it wasn't a particularly busy day. The big banks were mixed. BHP and Fortescue Metals Group were both down around 1%. WiseTech Global was off closer to 2%, while Xero finished about 1% higher.
Sean, I know I'm biased, but we've had some really good, definitely biased when I say this, some really good interviews of late. And you mentioned WiseTech and Zero just then. And last week, you spoke to Dushko Bajic from First Sentier Investors, all about kind of why he likes WiseTech, why he likes Zero, why he likes Pro Medicus, a few of those kind of tech stocks. Great interview. But you've got a really good one coming up after the show today. And it is all about crypto. You're speaking to Caroline Bowler, the CEO of BTC Markets.
Yeah, so we haven't really checked in on crypto for a while. Bitcoin's trading above 60,000 US dollars a unit, so it's doing pretty well at the moment. What's interesting, according to Caroline from BTC Markets, is the shift of investors from retail investors, mums and dads, to more sophisticated investors. Now, that might be institutions, but it might be home offices, that type of thing. Bitcoin and those other major Solana and Ethereum, they've got most of the support, but it's just interesting that sophisticated investors are getting into it now. We also talk about regulation of cryptos and the future for the sector. It's a great chat with Caroline.
Yeah, it certainly is. All right, now checking international markets thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au, and all eyes have been on China, Sean.
Yep, sure have. There were hopes that China would come out with another big stimulus package over the weekend, but Beijing disappointed. The government made some stimulus announcements, but nothing really that got investors too excited. Beijing will issue more debt to boost the property market, recapitalise banks and help cash-strapped local governments. Officials said more steps are under discussion. So far, there's been quite a bit of monetary policy support, but not much fiscal policy support, not much direct targeting of individuals, money going directly to people. Stocks tumbled in China last week after state planners held a press conference on the economy, but really failed to give any more of that fiscal support. So it's a bit rocky, I would say, at the moment. And of course, that matters for Australia because we sell so much stuff to China. On Wall Street, the S&P 500 reset its record high for the 45th time this year over the weekend. That came after some of the big banks, JP Morgan, Wells Fargo, as well as BlackRock, outlined September quarter earnings, which were a bit better than expected. Here's one for you, Michael, because I know you spent time on the weekend on this one. Elon Musk, he showed off prototypes of Tesla's next major products, Cybercab and Optimus. Now, I'm going to ask you about it, but investors weren't impressed because the share price fell 9% after the unveiling. But what do you reckon of Cybercab, which of course is a driverless cab, and Optimus, which is a robot?
Oh, look, I do not spend a huge amount of time on X. Occasionally, I'll just check in to see what's going on. And of course, because Elon Musk owns X, there was a great deal of discussion about the new robots, the Optimus robot. And I don't know if you've go and check out some videos of when this robot was unveiled, and they walk out kind of into the crowd. They walk out amongst everyone, and it does look like a modern version of C-3PO. From Star Wars. I've got to say, it looks quite sinister. And Elon Musk was even talking about the fact that I think he said, like, the Optimus robots will walk among you. Please be nice to them. And he said something about the fact, like, we're 80% sure that this is going to be good for humanity, or something like that.
It's the other 20% I think we're mostly worried about.
Indeed, and I'm paraphrasing there, but he was kind of, there was. You know how sometimes Elon Musk gets a little bit carried away in his presentations, and almost as though he doesn't realize that every single thing that he says is kind of being beamed out around the world. And an admission like that is not great for confidence. Anyway, go and check these things out. It is, honestly, it's a bit frightening.
Yeah.
Fascinating for the business, though, because he did say that the eventual price point for this is going to be about $20,000 to $30,000, which is very, very low considering what they're saying that it can do, that it can replace a lot of menial labor. Like, they do all kinds of jobs around the house, in workplaces at $20,000 to $30,000. The expectation from Elon Musk is that this could be the most successful product ever.
He might think that, but investors didn't, because I think it was about 60 billion US dollars wiped off the value of Tesla after the release.
I think everyone's clinging to that 20% risk of it destroying humanity, maybe.
Just very quickly, finishing global markets. Oil's trading around $79 US dollars a barrel. Gold's 26.57 US an ounce. And the Aussie dollar is buying 67.5 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, ASX-listed exchange-traded funds are on track for record growth this year after a surge of investor inflows during the September quarter.
In the first 9 months of this year, investors put $23.3 billion into ETFs, of which more than half came in the September quarter. The full-year inflow record was 2021, when inflows hit $23.6 billion. We're more or less there already in just 9 months. Investors are directing the bulk of their capital into index tracking ETFs, which now account for more than 90% of total Australian ETF industry assets. The majority of money coming into these ETFs is for international equity ETFs. There was also a jump in fixed income ETFs, reflecting the higher interest rates. They're much more attractive fixed income ETFs and rates are higher. The value of the Australian ETF industry is now more than $46 billion, helped not only by inflows, but also strong share market gains, according to Vanguard. These are all Vanguard figures. There are now more than 2.2 million ETF investors in Australia. That's about the same number as property investors. It's big time.
Yeah, certainly is. And our billionaire WiseTech founder, Richard White, has offloaded around $60 million in shares in the logistics software provider.
The tech group CEO sold 461,891 shares at around $132 a piece, which is close to their all-time high. Mr. White has frequently sold down his stake in the company. Last month, selling about $46 million worth of shares. Another quirky aside from the market on Friday, Seven Group Holdings is changing its registered company name to SGH Limited. Chief Executive Ryan Stokes said Seven has evolved into one of Australia's leading industrial-focused diversified operating companies, and the rebrand better aligns the company with its core operation, which basically, Michael, is another way of saying everyone keeps thinking we're the TV station, but we are much, much bigger than that, and our name needs to reflect that.
Sean, Foreign Minister Penny Wong on Friday said less than $500 million worth of trade impediments remain after a deal was sealed with China to create a timetable to allow the full resumption of Australian live rock lobster exports by the end of this year.
Now, I don't want to have a bias towards anything, but if you're going to export something, rock lobsters are pretty cool, don't you reckon?
Yeah, oh, absolutely. Anything with claws.
Yeah, and just the name, rock lobster. I mean, it might be the song.
Yes,
B-52 song, but no, I'm not going to. Senator Wong said the rock lobster trade was worth $700 million when the industry was shut down in 2020. Now, China halted rock lobster imports in 2020, along with a bunch of other things, after Australia called for a review of China's role in the origins of COVID-19. China actually claimed they'd stopped the imports due to biosecurity concerns held by the Chinese. Now, Trade Minister Don Farrell said that the government had resolved all those biosecurity issues. Not surprising. Basically, $20 billion worth of exports to China was stopped. We've pretty much got them all back now.
This story, Sean, I don't know what to make of this one. Qantas has had to apologise after a recent flight from Sydney to Tokyo featured an R-rated movie shown on every single screen on the plane.
I must say, I kind of ignored it. We try and ignore salacious stories here at Fear and Greed. But then when I was reading about it in the New York Times on the weekend, I thought, who am I to filter this story?
Yeah.
It's just a good yarn. Basically, the flight crew played the movie following the malfunction of personal in-flight entertainment, or the personal in-flight entertainment system last week. A lot of the information actually comes to people who are on the plane. They recounted the flight experience on Reddit. One user said that the film features sexually explicit language, images, and words displayed on the screen. It played for almost an hour before it was shut off. According to online comments from people who said they were passengers on the flight, the movie couldn't be turned off. It was stuck on live. Qantas said in a statement that the crew chose the movie based on the request from a number of passengers.
So this is the problem with putting things to a public vote.
Yeah.
You get the people that have already had a couple of wines and they go, yeah, let's put this one on. Everyone's going to love it. The kids will go nuts for it.
They will. Apparently the movie was something called Daddy-O, D-A-D-D-I-O, Daddy-O, starring Dakota Johnson, she of 50 Shades fame, and Sean Penn. Qantas said it's reviewing how the movie was selected.
Can you just imagine if you had kids on that plane? You'd be like,
Oh.
"Don't look, kids. Avert your eyes." And you just have the flight crew going around and handing out kind of the eye masks. So if they can't turn the screens off, you got to avert your eyes some other way. I love that story, and I love the fact that we had to wait until the New York Times ran it before
I know.
before we did.
Have some credibility.
Yeah, no, we're clinging to credibility, Sean. It's a tenuous grasp at times. International news now, and Boeing will cut about 17,000 jobs and delay the first delivery of its 777X jet as it confronts deepening losses and the effects of a weeks-long strike by its largest labour union.
Chief Executive Kelly Ortberg announced the cuts, equivalent to 10% of the airline maker's workforce, in a message to staff over the weekend. Financial troubles have escalated at Boeing since the start of the year, when a door panel flew off one of its 737 MAX jets on a passenger flight. Regulators demanded a slowdown in manufacturing to fix quality problems, which reduced the amount of cash flowing into the company. Last month, 33,000 workers walked out of Boeing plants in Washington state after members of the Machinists Union overwhelmingly rejected a new contract. This is all according to the Financial Times. The work stoppage halted production of the company's 767 and 777 planes, further cutting revenue, putting strain on its suppliers and customers. Then the debt rating agency S&P warned of a possible downgrade of Boeing's bonds to junk status. Nothing is going right, and now they had to cut 17,000 jobs.
Yeah, that is extraordinary. Sean, we are in the countdown, really, aren't we, to the US presidential poll on November 5. It is mere weeks away. And that's taking all the headlines, of course, but already 67 countries with a total population of about 3.4 billion people have held elections this year.
Incredible, isn't it? The good news, according to The Economist magazine, is that voter turnout has risen for the first time in 2 decades, based on the average for all countries that have held elections. Among places categorised as full democracies, that's by the Economist Intelligence Unit, turnout held steady. In flawed democracies, it rose sharply by about 3 percentage points. Turnout increased in many countries, including France, Indonesia, South Korea, and Mexico. It was even higher in the European parliamentary election. The report said that efforts to undermine elections, often via social media, have generally failed, and elections have become more peaceful. Increasingly, voters are holding leaders accountable. However, some elections remain what can only be described as a sham. Think Russia, think Algeria. There are still some places where the outgoing leaders wield power. So Indonesia's Joko Widodo's son was elected as vice president. So there's a lot of talk that Joko Widodo will continue to have some sway in that country. Finally, in Europe, the other notable thing, according to The Economist, is that there's been a real splintering of parties. Germany is a good example, where you have far right, far left, and then the middle parties have become splintered, makes for somewhat difficult power sharing arrangements.
And finally, Sean, companies owned by private equity firms are landing in default more frequently than other speculative grade borrowers, according to a report from Moody's Ratings.
Private equity-backed companies defaulted at a rate of 17% between January 2022 and August this year, twice the rate of non-private equity-backed companies. Among the 12 largest private equity sponsors, as ranked by Moody's, the default rate was slightly lower at around 14%. Platinum Equity had the highest number and share of defaults, followed by Apollo Global Management. According to a report in Bloomberg, private equity-backed companies tend to have more debt and lower credit ratings than their peers, contributing to the high default rate. Higher interest rates have also weighed on corporate balance sheets, especially among borrowers with floating rate debt, which many financial sponsors prefer for flexibility.
Default or default, it's one of those words, isn't it?
Yeah.
And I'm sure there's a correct way to do it. And I'm sure I went the other way.
I think the Queen's English would be default, wouldn't it? Not default.
Yeah, you would imagine.
Yeah.
Default. You know what?
Default.
I don't think there is an answer. Someone will tell us.
Someone will.
We shall wait and see what happens.
Yes.
Sean, up next is Fear and Greed the Week Ahead, featuring resident economist Stephen Koukoulas.
All about the unemployment numbers which are out on Thursday. A lot more interest in unemployment now because we seem to be getting on top of inflation, even if getting it into the target band is taking a little bit longer than we'd hoped. What we don't want is for the economy to collapse and for the jobs market to plummet and, as a result, unemployment to rise. So that's kind of really an important part of the data set at the moment. So Stephen's very excited about that.
And after that is the Fear and Greed Daily interview with Caroline Bowler, CEO of BTC Markets.
And all about cryptos and the interesting fact that sophisticated investors now getting more and more interested in the Bitcoins of the world.
Indeed. They are both coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It is Monday, the 14th of October, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.